friends, welcome to another video of Positive Alpha. In today's video, I'm going to discuss on three very important and interesting topics which is from the subject Economics from CFA Level 1. So, the first topic is the one in which the students are usually quite confused when we talk about the fiscal deficit to the GDP ratio and what is the actual debt to GDP ratio, like what is the difference between them. The second topic that I am going to talk about is that how did we land up on the money as a currency? Because if you remember, earlier we had the barter system and then eventually we moved on to the gold standards and then finally we came to the fiat currency, which is basically the money that is in existence today. And the last, but which is the most interesting of them all, what is the money creation process? That is, how does the money multiplier effect work, and does money actually multiply, or am I joking? So I'll just see you on the other end of the video. So we are going to start with fiscal deficit versus the actual debt. Correct. Now what is fiscal deficit basically? So fiscal deficit refers to the net borrowing which is done by the government in a given fiscal year. That is, it is for a given time period. Now, why is the word net being used here? As you can see, I have written the equation G minus T. So, G minus T basically refers to the net government expenditure. What do I mean by that is that G यहाँ पे गवर्नमेंट एक्सपेंडिचर है, मतलब कि गवर्नमेंट ने कितना पैसा खर्च किया है. Correct? It could spend on things like roads, it could spend on some capital projects, it could spend on infrastructure, healthcare. And what is T? T basically you can say is the inflow for the government, that is the taxes that the government has been able to collect from the society. So G minus T basically gives us the net amount of extra money that the government has ended up spending. So when I say it is the net amount of extra money that the government has ended up spending, it basically refers to the net borrowings that the government has done in a given fiscal year. Okay, so it is basically for a specified period. This was fiscal deficit. And what is government debt? Government debt is basically the total debt that is, or the total money that is owed by a country. It could be either to your local institutions itself or it could be from the world, but it is referring to the total debt that is owed by any country. Okay, so I have written here, if you can see carefully, that it is a lifetime running tally, correct? And for fiscal deficit, it is the amount that has been calculated only over a specified period of time. I hope this concept is clear by now. So I'll just use an example that will get us the concept a bit more clear. So let us say that the US federal debt at this point of time is $22.8 trillion. Obviously, this is not the exact figures. I just picked this up randomly. Okay. So other is the fiscal deficit is $984 billion. Now, one good thing which I could give you as a hint is always think about fiscal deficit as the loss that has been made in a given financial year. Like for a private corporation, similarly for the government, when you refer to it is called as fiscal deficit, correct? So this is one good thing that you can remember to be more clear about fiscal deficit. Okay. Apart from that, for all those who are confused between the trillions and the billions, what I'll do is I'll just write down here 1 trillion is equal to 10 to the power 3 billion. Okay. So this $984 billion is really a small number in front of $22.8 trillion. Now let me take an example where what we exactly do is we add $100 billion of debt on the government, okay, in the current year itself. So what will exactly happen here is that the fiscal deficit will go up by $100 billion to actually become 984 plus $100 billion, which gives us $1084 billion. Considering that this is the additional amount of debt जो मैं इस particular year में ले रहा हूँ. अच्छा, फेडरल डेट के साथ क्या होगा? फेडरल डेट में when you add this $22.8 trillion, it's basically $1 trillion, correct? So it makes a total of $22.9 trillion. What is this $22.9 trillion? It is the total debt that is outstanding for the US economy, and fiscal deficit is for the given current year. Okay, I'll just write this down once more. G minus T basically. So this is the amount that they had to borrow because they were able to effectively, their expenditure exceeded their tax collection by this amount. Okay, so they made an additional expenditure than what they made. So what is the number one reason that the government for such expenditures are able to borrow such huge amounts? It is the faith and the credibility of the different governments over the entire world. So for somebody like US, we know it is a financial superpower. It represents a huge financial part of the entire world economy. So it is always able to borrow a huge amount of money and subsequently have this huge outstanding debt. Okay. So let me take an example where RBI, which is the Central Bank of India, is lending the money to the government of India. So effectively what it is happening is that as long as it is with RBI, it is basically the Indian rupee that the RBI holds. Now when RBI is actually transferring it to the government, when it goes to the government, it becomes a government debt. So more or less, it is like you're taking out the money from your left pocket and you're putting it into the right pocket. That's how funny it sounds to be, correct? But that is essentially what it is like. So I'll just take an extreme scenario where the RBI is printing currency and giving it out to the government. So effectively, as soon as it goes to the government, it becomes a debt, correct? Now I'd just like to mention the current stats that have been ongoing. So of recently, if you would have seen the budget, India's fiscal deficit took a huge jump to 9.5% of GDP. The fiscal deficit is always expressed in terms of GDP to give us a relativity of the government expenditure, the excess government expenditure that it has made as a percentage of GDP. Now, this has largely been due to the coronavirus, that the expansionary policies that the government has to opt for. And if you look at our debt to GDP ratio, even that has gone up to 89%. So this, until a couple of years back, it was more around 78 to 80%, but post COVID, even that has taken a jump up to 89%. So this is basically our total debt to GDP ratio, that is the total outstanding debt in the lifetime, whereas this represents to the fiscal deficit, that is the amount that the government has had to borrow this time. And if you would have seen the budget, you'd be aware of this. So what happened in barter economy was that people used to pay each other in the form of goods or services. Now how exactly that happened was, so let us say that there is this one person who is a farmer and the other person who is basically a cloth seller. So the farmer, because he would, let us say, be sowing wheat, so he would be having wheat. So what he would do is he would give wheat to this other guy who basically sells clothes, and in exchange for the wheat, that the person who sells clothes, he'll give him over some kind of cloth. So that was the barter system that was prevalent in the ancient economy. Now, what are the problems that you have with this barter system? So it is not necessary that you always need what the other person is actually providing, correct? Second is, obviously there is no common measure of value. Why do I say this is that, okay, in this instance, this farmer guy has gone to the person who is selling cloth. Now let us say that the other day, this farmer goes to somebody else's farm who has basically chickens or goat or a sheep. So again, you need to have some new conversion. He goes to somebody else who sells him vegetables like tomato or something else. So again, there is a different kind of conversion. So you need to, there's no kind of common measure of value that you can associate it with, correct? Everybody will have their own different conversion rates. Third point, I think, is self-explanatory. So storage basically not possible for perishable goods. What it means is that if in a barter system you're exchanging goods wherein you know कि यार ये जो दूसरा गुड है ये काफ़ी एक्सटेंड तक 2 या 3 दिन बाद खराब हो जाएगा. इट कुड बी वेजिटेबल्स, इट कुड बी फ्रूट्स विच यू कैन नॉट यूज़ फॉर अ लॉन्ग पीरियड ऑफ टाइम. सो आप उस पर्टिकुलर थिंग में कोई बहुत ही ज़्यादा बड़ी डील नहीं कर पाओगे बिकॉज स्टोरिंग इट इज़ नॉट पॉसिबल, करेक्ट. So now from here in, what happened was we came to a point where gold and silver had started to being used as the form of currency exchange. ओके, बी केयरफुल कि गोल्ड और गोल्ड स्टैंडर्ड अलग है. तो गोल्ड स्टैंडर्ड में क्या होता है कि गोल्ड स्टैंडर्ड में बेसिकली पेपर करेंसी हैड बीन स्टार्टेड टू बी यूज्ड बट इट वाज बैक्ड बाय गोल्ड. What was the reason of using gold or you can say even silver coins in the past? Number one reason was it was not perishable. Obviously gold or silver is not perishable. Second was that even a small unit of coin of gold could carry a huge amount of value. So storing it was never an issue. And third and very important part I cannot emphasize enough on this is कि you need to have a belief that this particular thing is always going to remain valuable. Otherwise, nobody would be willing to buy gold if you knew that tomorrow gold does not have any value. So, a very important thing for something to be used as the currency is that we need to have a belief in it that it will keep possessing its value. Correct? So, I've just drawn a small diagram over here. I'll show you. Basically, first came the barter system. You can see in the right hand side of your screen. Then we came to the gold and the silver bagged, correct? Gold and silver were being used for exchange. And then came the gold standard. So gold standard is nothing basically, but it was the paper currency, but it was backed by gold. And then finally we came to what we have today, the money, that is the fiat currency. Okay. Now how did this come about and what exactly happened? Let us look into it. So there was this goldsmith and a lot of people, what they did was they thought that keeping so much amount of gold with them is reasonably unsafe. तो उन्होंने सोचा कि ऐसा करते हैं, इस गोल्ड को हम एक गोल्डस्मिथ के पास जाके जमा कर देते हैं. ठीक है. तो they started keeping the gold with the goldsmith and what the goldsmith did was he basically gave them a receipt in exchange. Or this receipt, what basically was written on it was that it has this certain amount of value and it was being backed by gold. Backed by gold means वो जो gold जो अलग अलग customers ने goldsmith के पास deposit किया था उसके exchange में he used to give them out a piece of paper which behaved as a receipt and which can also be said as to be known as a promissory note because it held the promise कि whenever you go and submit this piece of paper उसके exchange में आपको एक certain amount of gold मिल जाएगा. Correct? So basically we can say that the receipt served as a proxy for gold. Now what happened was, so all the people who had this receipt, they could go to the other person, they could give him this receipt and they could take the concerned goods or services in exchange for giving out that receipt. So this is how things worked. Now what happened was the goldsmith had come up with an idea. What idea he came up with was that he realized that all the people are not withdrawing the gold at same point of time. मतलब इफ ही सॉ कि यार 10 लोग अगर मेरे पास बैंक में गोल्ड जमा करके जा रहे हैं तो उसमें से एट अ गिवन पॉइंट ऑफ टाइम से मे बी 4 या 5 ही आते हैं जो बोलते हैं कि आई नीड माई गोल्ड बैक. रेस्ट ऑफ देम डिड नॉट कम बैक टुगेदर एटलीस्ट. सो व्हाट इट डिड वाज कि द काउंटर पार्टीज दैट नीडेड गोल्ड फॉर बोरिंग पर्पसेस ही स्टार्टेड लेंडिंग देम आउट गोल्ड एट अ certain rate of interest. By this effectively what he did was he had started making out money, correct? So he just lent out them gold on what pretext कि यार सब लोग एक साथ नहीं आएंगे मेरे पास गोल्ड बोरो करने के लिए. सो दिस लेड टू द आर्ट ऑफ मनी क्रिएशन जो हम आगे जाके डिटेल में मैथमेटिकली देखेंगे कि एग्जैक्टली होता क्या है. एंड जस्ट रिमेंबर की टर्म, दिस वाज नोन एज द कंसेप्ट ऑफ फ्रैक्शनल रिजर्व्स बैंकिंग. व्हाई फ्रैक्शनल रिजर्व बैंकिंग? दैट the goldsmith now he started giving out gold to others who actually wanted it, but he never gave out all the gold. Okay, so he kept this certain amount of gold with himself, whereas the remaining amount he lent out to other people on the pretext that सब लोग एक साथ नहीं आएंगे शायद मुझसे borrow करने के लिए. So this remaining amount that was kept in the bank was basically known as to be kept in reserves. I hope यहाँ तक clear है कि ये situation कहाँ से आई जहाँ पे promissory notes गोल्ड के एक्सचेंज में इकोनॉमी में सर्कुलेट होने लगा. एंड इवेंचुअली द गोल्डस्मिथ रियलाइज्ड वेरी स्मार्टली कि बिकॉज नॉट ऑल पीपल आर विड्रॉइंग गोल्ड, सो लेट मी जस्ट गिव आउट दिस गोल्ड टू अदर पीपल ऑल्सो. जबकि द पॉइंट इज कि दैट गोल्ड बिलोंग टू समबडी एल्स, बट ही गेव इट आउट ऑन लोन बिकॉज ही न्यू दैट ऑल द पीपल वुड नॉट कम बैक टुगेदर टू बोरो फ्रॉम हिम. So let us look at the next section where we look at the money creation process and how does it come about by using this very important concept of fractional reserve banking. Now taking it from the previous path wherein I mentioned that the goldsmith basically what he did was that not all the gold was withdrawn but a certain amount of it he did withdraw and he lent it out to others at a certain rate of interest, correct? So Just let me explain it with numbers and how it is actually happening in the modern banking system, then it will make much more sense to you guys. So let us say that the reserve ratio that has been asked to maintain is 10%, okay? So what it actually means is that the 10% of the total money that is deposited into the banks is supposed to be kept as reserve, whereas that remaining amount you could lend out to others. Why is it so? Exactly the same context as I explained previously, where the goldsmith understood the fact that not everybody wants to withdraw out their gold at the same time. And same holds true for the money which is in the banking system currently. Not everybody goes and withdraws out their money at the same point of time, correct? Now, I have drawn here a particular table where you can see bank A, bank B and bank C and so on. This is basically to make you understand how money is being created out of thin air, you can say. So we have this bank A where let us say the government has put in an additional 100 into the banking system. Where? Into the bank A. Now how it has put? It has put it to open market operations. Basically it also involves printing of currency, but that is beyond the scope of this particular video. I'll be explaining it somewhere else. Let us say that this bank A is now having additional 100 bucks. Now because 10% of the money is to be kept as reserve, it will keep the 10 as reserve, whereas what it will do is it will loan out the other 90 to some other customers, some new customers. So this is what? This is your asset side of the balance sheet and this is the liabilities. The deposits that the customer, or basically in this case the government has made into the bank, is basically a liability on the bank because you do owe 100 bucks, correct? So they have kept 10 with themselves and they have given out 90. Now what happens is, imagine that this person who has borrowed this 90 bucks, he goes out into the market, he spends this 90 lavishly, and this 90 rupees has now become a form of income of somebody else. Let us say some person B. I'm ignoring the fact of taxes. So now this person B, what he does is he goes to the bank B and he deposits his 90 bucks into the bank B. So again, using the 10% rule, the bank B, what it will do is 10% of 90 it has to keep in the form of reserves. So it will keep 9 rupees as reserves and the remaining 81 it will loan out to some other customer. So the deposits on its balance sheet is 90. Now let us say that this money that has gone to this guy C, what he does is he spends it out lavishly and he uses it in his own fashion, and what he has basically transferred this wealth, let us say, to some other guy XYZ person who has in the form of income made this 81 rupees. Now what he does is he goes to the bank and he deposits his 81. Obviously I'm using an oversimplification here, but just to keep things very simple. So now what will bank C do is the 10% of 81, the 8.1 bucks, they will have to maintain as reserves and the remaining it will loan out. So you can see that effectively this has come down into a never ending process. So what is its mathematical value? I'll be just using a formula, the derivation of which I'm not explaining in this video. So the total money that was created due to just this additional 100 that was put into the banking system is 100 divided by 0.10. Why 0.10? Because that is the reserve ratio. So the total additional money that was created in the banking system was 1000 bucks, merely out of the 100 that was given to the system. So this is this magical process of money creation. How money is getting created out of thin air, because this same 100 bucks is being borrowed, it is being spent in the economy and it is coming back into the other bank and it is again being lent out and so on. And what is the underlying root cause for this happening? It is the belief of the banks that not everybody who has deposited their money into the bank, they are not going to come back at the very same time. Let me share an example before we move ahead in the video. I think around 10 to 12 years back, probably somewhere around the 2008 crisis, there was this rumor spread that the ICICI bank has fallen short of cash, and all of a sudden all the retail investors just ended up outside the bank the very next day. अब obviously ऐसा कुछ जब होगा तो काफ़ी ज़्यादा प्रेशर आ जाएगा बैंकिंग सिस्टम पे. आप रिजर्व रेशियो से देख सकते हैं, बिकॉज उस पर्टिकुलर पॉइंट ऑफ टाइम पे बैंक के पास उतने पैसे होंगे ही नहीं बैंक में. बट दैट डज नॉट मीन दैट इट इज नॉट केपेबल ऑफ पेइंग. But then you don't expect कि all the people understand this particular phenomena. So the government had to intervene at that point of time and give an assurance कि all the people who have invested their money or who have their money deposited in the ICICI bank, it will be handled by the government. And after this assurance, the confidence of the people restored and that crisis eventually ended, but it was a stressful time for the bank. So we can see that how original 100 rupees has turned into 1,000 rupees worth of economic transaction, and this thing is known as money multiplier effect. I hope you guys understood that how money is getting created. So money does not definitely grow on money plants, but yes, money can be created by the money multiplier effect. So what is the conclusion? The lower you will keep the reserves requirement with the banks, the greater will be the multiplier effect. How it is happening? Because had the reserves, let us say, been only 5%, then it would have been divided by 0.05. So it would have created some 2000 bucks. So the lower you will keep the reserve ratios that the banks are required to maintain. Now, ये reserve ratio कैसे decide होता है? These are decided by the central bank policies, okay? So we are not going into that level of depth, but depending on lower the reserve ratio, the greater will be the multiplier effect. I really hope that you guys enjoyed this video, that you enjoyed all the three parts. If any questions, if you want me to make the videos on any specific topic, you can always put it down in the comment section. And if you like the video, please do like, share and subscribe. Thank you. Thank you so much, guys. Looking forward to meet in the next video. Bye bye.